recording well, eh? Yes, I'm also fine. So today I want to really explain something very vital in terms of asset management, or should I say that in terms of what we call tangible assets replacement planning. Okay, and I don't want to speak jargons, but I just want to make this session so simple, or I just want to make this explanation so simple such that everyone will be able to understand, because my main goal is to enable each and every person having different, or all people having different levels of education to understand this, eh? So you've seen circumstances whereby maybe somebody has bought maybe a pickup. Okay, somebody has bought a pickup to help him or her in maybe transporting agricultural produce in his or her farm, eh? And then you realize that a time come whereby this vehicle become useless, like it depreciates to a tunes of zero, or to a meager value. So then this means that if the farmer, or if this person was not really planning for replacing this asset or the vehicle, then this person would face difficulty in terms of maybe finding funds to repurchase another or replace this machine. Same applies to, let's say for example, somebody who operates in transport industry. Let's talk for example of a boda rider, yes, who has purchased a new boda and happily get into boda industry, or not boda industry, but transport industry as a boda provider, service provider. Okay, so you ensure that, I've seen these ones, some of them, if you purchase this, maybe you funded this with a loan, then after funding this, they use the boda or the motorcycle, then it reaches a point whereby this motorcycle depreciates due to wear and tear. Depreciation means that it get old. For the maybe if you allow me use the lugha ya mtaa, wanasema imechapa. So boda ama pikipiki inachapa with time due to wear and tear. So the basis of this discussion today, I want to help someone who is not having this knowledge to maybe see on how they can use this concept to help them manage how to replace. For example, if you are having that your boda or the motorbike, which is helping you to do what? To conduct your daily businesses or operations, you should plan for this machine such that by the time it gets old and you dispose it off, or it can no longer serve the purpose for which you bought it for, then you will be having accumulated fund to enable you purchase another motorcycle, so that you ensure that your business continues without having an end. So that is what I'm going to discuss here. Yes, so the title of our conversation today, or the title of this episode, is that I want to help you to know how you can plan for replacing the machine that you are having, be it a vehicle, be it a motorcycle, be it any machines that maybe you are using in your place, or it's helping you to conduct your daily activities or operations. Yes, you should plan for it, so that by the time it gets over, or it is diminished, or it is depreciated to zero value, then you have funds somewhere which will help you to purchase another one without need of going to a loan, or maybe looking for other sources of funds, so that you can purchase a new one. So this concept I'm talking about is simple. It's called provision for depreciation, or you are providing for depreciation. It means that you are acknowledging that the machine you are using, it's getting old. Okay, so you have to prepare for purchase of another one when it reaches a point that it can no longer serve you as it was serving you. So when you plan for that, then you find that you will never face challenges with replacing this machine. So that is called provision for depreciation. So there are so many benefits of doing this, and that's what I want to discuss here. So how do you provide for depreciation? So that I want to explain it so that anyone can understand. I want to use an example of maybe somebody who has bought should I use boda? Yes, let me use someone who has bought maybe a Boxer. This is a type of boda or Bajaj, or maybe Honda. Okay, so I want to assume that somebody has bought a Boxer or Bajaj, maybe at 150,000 150,000 Kenya shillings. I'm explaining this in the context of Kenya or Kenyans. So let's assume that you bought Bajaj at 150 shillings, 150,000 Kenyan shillings, and you want to use this Bajaj to do your operations, and the useful life of this Bajaj. The useful life just means that the time that this Bajaj can you can use the time that this Bajaj can serve you. Okay, you can use this Bajaj to do your operation, or this motorcycle to do your operations. That's what we call the useful life of the machine. So I want to assume that this Bajaj, you can use it for, let's say that you can use it comfortably for 5 years. 5 years. Okay, let me 5 years is a bit small. Let me say you are going to use this Bajaj for 10. Let me give it a maximum of 10 years. For boda riding, no, 10 will be so long time. Let me just use 5. Okay, let me just use 5. So you bought it at 150,000 Kenya shillings, and you have planned to use this Bajaj for, or you've predict that it will serve you for only 5 years. So you want to plan that by the end of 5 years you should be having another Bajaj without going to seek for a loan, or without looking for other sources of fund, but through the revenues that you are going to receive. So let's say, for example, you are using this Bajaj to provide transport services, carrying people from what we call boda in Kenya or in other East African countries. Okay, so you are going to use this to do your operations, and we have said that it's going to serve you for 5 years, and then at these 5 years we are going to consider that it is really the worth. Okay, the worth of this Bajaj will be, I don't want to say maybe I want to say that by that time you can sell it at a scrap. as a scrap metal. So we maybe can we can give it value of, let's say, 10,000. Okay, it can be value of 10,000. But for this case, I just don't want to. I want to assume that by the end of 5 years, the value of that Bajaj will be 0, so that I don't complicate issues. Yes. So what I'll do, I will divide this, the cost of this. I'll divide the cost of or the amount that we use to purchase this Bajaj, which is 150,000, by the number of years that it's going to serve you. Okay. So that one will give us what we call depreciation per year or per annum, or amount of that machine that shall have gone down, or the value that shall have gone down after every year. So what I'll do, like I've said, you divide the cost by the number of years that this machine is going to serve you, or for, and in this case is 5 years. So this means that every year 30,000. Okay, 30,000. The machine or the pikipiki or the motorcycle shall have depreciated by 30,000. So in the first year, at the end of the first year, then 30,000 shall have gone. So what does this mean? So it means that you should create an account called provision for depreciation. Okay, just create an account. Okay, create an account somewhere. So at the end of the year, you should ensure that in that account you have saved 50,000. Okay, you not 50,000, 30,000. At the end of the year, you should ensure that you've saved 30,000. And where is this savings coming from? Is you will take this one from the revenue that you are generating. Okay, and maybe I can break down this one to maybe monthly. So every month, how much should you save, so that you ensure by the end of the 5 years you are going to have a new Bajaj. So assuming that okay, I will explain that, because maybe even if you bought Bajaj 150,000 now, maybe in the next 5 years it won't be 150, due to time value of money, and also due to changes in the economic dynamics. So I will also explain how you can go about that, but for now let me just say that I've said that at the end of the 1 year you should have spared maybe 30,000 from the revenue that you are receiving in your daily operations. Okay, so I want to calculate this is yearly. So in a month, every month, what is the amount you're supposed to be having as provision for depreciation? Okay, so I will divide that 30,000 by the number of months in a year, which is 12. Okay, all right. So that one will give me something like 2,500. That one will give me 2,500. Okay, so you just do your operation. Okay, and the revenue you are getting. So every month you must ensure that in that account that you created called provision for depreciation, or kwa lugha ya mtaa, hii account yenye account ya pikipiki yako kuchapa, you have to put something. You must put 2,500 in it. Okay, you have. So in a month it will be in 1 month it will be what, 30,000. In 1 year it will be 30,000. Okay, so you put that one in that account. Then that is, so we can continue doing that. So like for example, I said, so in the first month we have said that it is 30,000. Yes. So if it means that at the end of, at the end of the first year, the value of your boda according to this concept, it's supposed to be what? It's supposed to be, you take 30,000, you less, you subtract from what? From the total cost that you use, that is 150,000. So you will be remaining with what? 150,000 you less 30,000, that is 120,000. Okay, so that one will be the value of your motorcycle when you are starting the second year. Okay, then after the end of second year, you depreciate again 30,000. Okay, so by the end of the second year, what will be the value of your piki or motorcycle? You again less 30,000, so it will be what? 90,000. Okay, so by the time you are starting your second you're starting your third year, the beginning of your third year, the value of your motorcycle is now 90,000. Okay, then at the end of the third year, already you depreciate with 30. So by the time you are starting your fourth year, the motorcycle shall have, the value of motorcycle will be what? 60? Shall be 60,000. Okay, yes. Then at the end of the fourth year, you depreciate with what? With 30,000. Okay, so by the time you are starting your first fifth year, what will be the value of your motorcycle? 30,000. Okay, 30,000. So then by the end of the fifth year, you depreciate with 30. So by the time you are starting the sixth year, the value of your motorcycle shall be 0. So at this time, the account that you created called provision for depreciation will be having already 150,000. You understand? We'll be having 150,000. So even if there is no any other, you don't really need to go and look for loan somewhere to maybe get a new motorcycle. So this is just a concept, and I've used 5 years to depreciate it, and maybe in real life situation, you'll find out that at the end of the 5 years, the motorcycle will still be having some value. Okay, so it's not zero, it might be having some value. So already you have money enough to purchase another motorcycle while this one is still having some value. So that value we call it residual value, but still that it can still push you for some time. So this concept will help you to plan for replacing a motorcycle. So if you use this concept well, you will end up by the end of maybe 5 years, or by the end of maybe 8 years, you'll be having even 2 motorcycles. You understand? So depending with how you use, but this is very important. I want this one to reach everyone who is having an asset which is a tangible asset that depreciates due to wear and tear. You can use this method to ensure that by the time the asset is getting old or its value is 0, then you don't have the struggles of searching where you can get the source of fund again to purchase another one. Because now I want also to explain something here. Let's assume that this motorcycle depreciated, yes, until by the end of 5 years, it doesn't have any economic value. Okay, and assuming that due to time value of money or due to changes inflation or the deterioration of purchasing power of money or value of money comes down, such that if you have 150, you cannot acquire the same machine, maybe the Bajaj Boxer or the Honda, with the 150, okay, with the 150,000. So I want to add another concept into this, so that you ensure by the time this machine is by the time you are doing this allocation, or by the time you are saving or you are sparing money for replacing this asset, then you don't get disadvantage that you are planful, yes, but yet this 150 now in 5 years is not enough for you to purchase, so you'll still have to need for another additional source of fund to add to this, so that you can acquire a new machine. So this is what you can do when providing for this depreciation. I said that every month you are supposed to remit to this account 2,500. So what I can tell you, don't put this money into a bank account, okay? Don't put this money into a bank account or current bank account, because when you put it there, it will always be the same, and not even always be the same. It will be less, being that banks also usually charge what we call bank maintenance charges, so they will be deducting portion of that money, so it will be less. So what I can urge you should have what we call fixed income fund or money market fund with CIS, collective investment schemes, or what we call mutual funds. So you put this money in there, and you understand that those CIS investments or money market fund, or talk of fixed income fund, you will find out that they will be giving you competitive return or attractive return. So this return will take care of the inflation risk, okay, such that by the time the 5 years is elapsing, you will not be having 150, okay, 150,000, but you will be having something like maybe 200,000. You understand? You'll be having something like 200,000. So even if the Bajaj or the motorcycle price has gone up to maybe 180, then you will have no struggle. You will just take the 180, which you still leave you with maybe some balance, or maybe let's say 20,000 in that account. Now, another importance of providing for this depreciation, if maybe I just explain again, it can help you with what we call repairs. You don't really need to go to struggle when now you want to repair your motorcycle, maybe when you have a breakdown, because you have an account called provision for depreciation. So you can take some money from this account to take care of of repairs that you can be having. So I've just explained this in the context of boda rider, or maybe a boda service provider, okay, somebody having a motorcycle and serving in that capacity in transport sector. But this concept can be applicable to everyone. Maybe if you are having a matatu somewhere, so this concept is very important. It's majorly used by companies, but I know it's a concept that is also applicable. You can use this one to also apply at personal levels, okay? So this is what I wanted to tell you. Then also, if you are to do the reporting, or maybe if you are to do the reporting to the tax authorities, then it will be easier, because now you can use this depreciation. You can claim this depreciation from the revenue that you are doing that you generate. So it alleviates tax burden, which is one of other importance of the provision for depreciation. But this one in the context of usually used in the context of companies, but also as an individual, maybe if you want to file your returns at the end of the year, maybe you usually require to have your statements there, where you will declare the revenue that you received and the expenses that you also incurred during that period, so that you have your net income, which is now what we call taxable amount. Then from there, if you look at it well, it will reduce the amount of tax payable to you. Unlike somebody who maybe is told to pay tax and was not taking record, you have no such expenses of depreciation. So this is very important, but that's that other side. I'm saying that's jargon. Don't go into that. What I'm saying that always when you buy a new machine, predetermine the amount or the number of years it's going to serve you. Then use the number of years, divide the cost by the number of years it's going to serve you. The value that you're going to get is what we call the depreciation, so per year. So you can also divide that by 12 to get the number of depreciation per month. Okay, then after having that, ensure that you create that account. So any revenue that you receive, total revenue that you receive in that month, ensure that you have, for example, the one I used 150,000, which was the cost of that machine or the cost of motorcycle. Then I've said that per month, that would translate to 2,500. So you ensure that you create that account and you remit 2,500 in that account. And that amount is not yours, it's for replacing the machine or for repairs in case the machine breaks down. So this is very important. This is what I want to share with you. Yes, because I know majority, the normal people who are not from the finance or the accounts background, they might not understand this. So this is why I want to share with you in a layman's language, so that it will help someone who will meet this video. So please share this video widely, and also share with these people who might be having these tangible assets. Tangible assets mean that as an asset that you can touch. There's something that have the asset that are having physical. They are physically, you can see them physically, you can touch them. You can see them and you can touch them. So those are having these tangible assets that require substantial amount to purchase, please adopt this concept. It will help you greatly. So thank you. That's what I wanted to share with you today. Yes, please like, comment, and also share. Yes, thank you.